So we're almost done creating the 3 financial statements for French Realty. Previously, we created an income statement and a statement of owner's equity for the company. And French Realty has also hired you to create a balance sheet similar to the one above for the end of June by using the statement of owner's equity that you just created in a previous video and from using the same table data as from before. So get out a piece of paper, pause the video, and create a balance sheet for French Realty. So the first thing we have to remember when we create a financial statement is what is the formula for that financial statement. So for the balance sheet, it's just the accounting equation. Assets equals liabilities plus owner's equity. But first, before we can get to that, we need the 3-line heading. So the first line is always the name of the company, French Realty. The second of the 3 lines is always the title of the financial statement you're working on, in this case, the balance sheet. And the 3rd line is always date related. And this one for the balance sheet is something that a lot of students get incorrect. So for the balance sheet, is it going to be covering a period of time, or is it going to show the balances on a specific date? Well, it has to be for a specific date. In this case, it's the end of June, so June 30th. So why is it a single date? Well, unlike the income statement and statement of owner's equity, the balance sheet is like a snapshot in time, like a photograph. For example, it's going to show your cash balance on that day. So on the left side of the balance sheet, we're going to have assets. And then looking at the table below, which of these accounts are assets? So the first asset is everyone's favorite asset, cash, $3,310. So how about accounts receivable? Is that an asset? Yes, because that means that in the future our customers are hopefully going to be paying us the amount they owe us. And the amount that our customers owe us is $1,490. So AR is definitely an asset because that's a future benefit. And then another asset is our office equipment, $6,700. So that looks like all the assets. So we're going to add those up, 3310, 1490, 6700. That gives us total assets of $11,500. And since we're done with that column, we put a double underline underneath it. Now on the other side of the balance sheet, we have liabilities and owner's equity. So we're going to start off with liabilities. So looking at the table below, does this company have any liabilities? And how many of them are liabilities? Well, I see one liability, accounts payable for $2,000. So on the right side, besides liabilities, we're going to add owner's equity. And this is the part where it gets a tiny bit tricky. So do you remember the 3 formulas for the 3 financial statements? They are revenue minus expense equals net income, bind with an E for the statement of owner's equity, and then specifically for the balance sheet, it's assets equals liabilities plus ending capital. And where do we get that ending capital from? Well, follow the arrow backwards. It came from the end of the statement of owner's equity. So a lot of students mistakenly use the beginning capital instead of the ending capital. It's an easy mistake to make, but you really need to be careful. If you use the beginning capital, then your balance sheet will not balance. So let's look at the statement of owner's equity that we created in a previous video. So here it is. And the amount of capital that we're going to use is $9,500, the ending capital. Do not use the $8,000. A lot of students will look at the table down here and see that the capital is $8,000 and they just automatically use that amount. But notice it says capital on June 1st. this balance sheet is being created on June 30th. So we cannot use the capital account from the beginning of the month. We have to use the capital amount from the end of the month, the ending capital. So now that we have S French Capital $9,500 on there, and then of course don't forget where that came from. That $9,500 came from the statement of owner's equity and was the ending balance of capital. So now we're going to take the $2,000 of accounts payable plus the $9,500 of capital, add those up, and we get total liabilities and owner's equity of $11,500. And since we're done with that column, we put a double underline. And the last thing you need to double check with a balance sheet is to make sure that it balances. Do assets, $11,500, equal liabilities plus owner's equity? Yes, they do. $11,500 of assets equals $11,500 of liabilities plus owner's equity. So congratulations, your balance sheet balances. So on the homework on the test, when you're creating a balance sheet, double check. When you're done, double check. Do assets equal liabilities plus owner's equity? If they don't, you need to backtrack and find your error.